Hi guys, welcome back to the channel. So I have a little fun one today. I got a question from one of our members in our community. It said, Mike, I know you stick to your trading plan and stick by the book and everything, but are you trading this GameStop? Of course. So the simple question really brings to light, should I be teaching people how to trade meme stocks? It's very interesting. I understand the lure. Let's take a quick look at why maybe we should consider it and obviously some reasons why maybe we should pass on it. The question really comes down to, as a developing trader, what are you trying to accomplish? Are you trying to develop the skills to be a professional trader for the long run, or do you just have diamond hands? Let's take a look and see. Let's break it down so you give yourself some information so you can make the proper decision and maybe balance it out a little bit. So really, I think the first question you need to ask yourself is, what is my role as a professional trader? And really, what is the role of an AP, an advantage player? And for example, maybe a blackjack player who just card counts and takes advantage of that little edge. Well, in pro trading, really our goal is to execute a plan. So I think the first question you need to ask yourself is trading this type of activity part of my trading plan? If it's not, it's a non-compliant part of your plan, and you really should be sort of slapped for that, right? But then brings up the other question. What if you're trading these stocks in accordance to your plan? I have a strategy that where it meets a certain criteria, and then I'm going to execute according to that. Does that make it valid? I think the argument is yes. Obviously, you follow risk management rules and things. All that apply to your trading plan. So if you're executing a stock trade based on your trading plan, last time I checked, there's kind of crazy stuff going on, but it is, a listed stock on the New York Stock Exchange, like these other memes. Well, if you trade according to plan, trade to your risk management, it's something that sort of validates the checkbox in the I can trade it. Okay, next. Is there a catalyst for your actual trade setup? Well, I have to argue that yes. On GME, AMC, these other memes, there's technical movements, there's volume. Clearly, there's changes in volume. There's activity, say in the options market, that would generate it. Whatever your plan defines as a catalyst. But I got to tell you, you don't have to go too far to look and say, you know what? This is a valid trade in my plan if it meets my sort of trade setup criteria. So there's another checkbox to, sure, I can do it. One can argue even on the short side, sort of a whack-a-mole strategy where AMC was issuing additional stock every time the stock popped. Well, these are great shorting opportunities. And while a majority of it was the profits I made were on the 13th, 14th on the long side, there was a sort of a tail opportunity there by shorting some of these, particularly when Keith Gill had his little live stream and just it was kind of an epic fail. But don't worry, I'll give you access to all my trades on how I did it and how it kind of petered out in a sort of a daily report card. I'll show you the link in a second. But what's the lesson that I want everyone to take away from this? Is this part of your trading plan, and should it be? One suggestion I have is, how about give yourself the right to trade these types of stocks? Say you had a decent month, the prior month. You can take 15% of your profits. Give yourself a little treat. And if you didn't have profits that month, stay away. Earn the right to trade these things. It has a little bit of a YOLO, all right? I get it. I was excited too. But you have to keep it within the risk management parameters of your trading plan. So maybe add in your plan, give yourself the right, but in a small piece, and then build that. Of course, as your trading profits grow and you become a better trader, you'll have more opportunities to do this stuff. But what would be some of the reasons why I kind of maybe encourage some new traders to get involved? Let's take a look. So in my rules, I have a 15% rule where I take 15% of my profits, or I have the right to take 15% of my profits and kind of play them into somewhat of a YOLO opportunity. But they got to meet all the trade rules and restrictions of my trading plan. Something you may want to consider. So was it in my trading plan? Yes. Did it meet the criteria of my trading plan? Yes. Did it meet the rules in my risk management parameters? Yes. Did it meet the maximum buying power restrictions? Yes. Was I a little caught up in the meme craze? Yeah, kind of a little bit. It's okay. But as long as I'm compliant, I'm fine with it. So after a long debate, I started thinking, do I really want new developing traders to sort of get exposed to this? And my original answer was no. But here's where I'm kind of a little bit more on the fence and a little more open to it, but in a restricted way. Number one, engagement. I really have never been more engaged in the markets than in the past few months. Sunday mornings or Monday mornings, waking up at 4 a.m., checking my phone to see, did the memes gap up? What's going on? 6 a.m., rushing down to my computer and opening up and getting an early start. The engagement level for me has never been higher. And quite honestly, one of my threats in my SWOT assessments is boredom. I sometimes find trading to be very mechanical and robotic, kind of like making the donuts. So to see something like this and get me engaged, it's so valuable. And for the new developing trader, I think equally as valuable. So, in the past, I've coached more of funds and prop funds and professional traders with managed accounts. But really, a lot of the members that we have here that I coach is really coming from the 2021 meme craze era. So, maybe they learned their lessons or maybe they made some, lucky money and they want to roll it over. But most of them really got burned but they realized they have the bug and they really want to learn how to do this properly. So that engagement really thrusted a whole new generation of traders, and I personally love it. I love this type of activity, and if it helps you get engaged, I'm all for it. Next, consider options as a way to place a stand in your trading. Little buying power needed, and you can get a taste without putting a lot of money at risk. You need to learn options, you need to learn some of the Greeks, but I think that's the best way, and that's what I used. And again, I'll show you in my trade journals how I actually developed my trading strategy and how I sort of weaned off when price started going up in GameStop. So consider options as the vehicle that allows you to do it, both long and short. Who am I as a coach and mentor to limit someone's entrepreneurial mindset? So if this really gets you going from an entrepreneurial standpoint, I'm all for it. Maybe it helps you outside of trading more than actual trading itself, but I encourage that all the way. And if it means going through the whole meme thing and maybe getting burned a little bit and learning your lessons, it's probably pretty good money spent. All right, next reason. And this is really where it opened my eyes. I'm a pro trader. I stick by the books, very conservative. My equity curve is pretty smooth. Don't have too many big drawdowns. Limit myself on the profit side. I get it. I'm going to regret that for the rest of my life. But 7 out of my 10 best trades in my career were meme stock related. GME, AMC, Mara, which is really not really a meme stock anymore, but they were all my top 10. They're all these high flyer YOLO type trades. So what does that say? Does that mean I rely on them? No, but I have to at least give props to at least open the door for this type of trading. Now, I've been doing this 26 years, okay? I'm not a newbie. If you're just starting out, get exposed, get the engagement, maybe learn a lesson with a few dollars lost. Don't put too much at risk. But I have to sort of recognize the fact that, what am I doing? I should be shorting, strangles in Intel, and here I am, YOLOing GME. So leave it at that. But the bottom line is it does increase the bottom line if you play it right. All right, next, and we touched on this before. If it doesn't meet your risk management requirements or your buying power requirements, such as say, I'm going to risk 1% per trade, that's it. That's part of your trading plan. So stick to your trading plan, but more importantly, stick to your risk management plan. So if you have some exposure, that's great. And if it doesn't work out, it's just like a losing trade. But really, those risk management parameters, even on YOLO, have to stay put for you to survive. Okay, and the next reason why maybe you should consider this, have a daily report card, whether it's a weekly, you'll see in my link below, a monthly. But consider having a daily report card even for your YOLO trades. If it's not going to work out and you lose some money, well, at least have some lessons learned that you can take to the next level. To me, that's the most valuable price that you can pay for a losing trade. But if you just give it a shot and it doesn't work out and you don't learn anything from it, then that's just pure stupidity. You really should just get out of the trading business. But if you learn from it, valuable stuff you could bring to the next part and phase of your development. Most important, learn from your experiences, particularly as a developing trader. So the naysayers and maybe even some conservative risk managers may say, no, stay away. That's just gambling. If you apply the techniques in your trading plan and your strategy to these meme stocks, I don't think it's gambling at all. All right. Just again, keep risk management in check and understand that if you apply your strategies, I think it's fine. If you're betting on a Roaring Kitty live stream, that's gambling. So separate the two and be able to defend your positions and your trade decisions in your trade journal and your report card. If you got that going for you, I think you can give it a shot. So again, click on the link below. I'll give you access to all the trades that I made and how I got in, what my catalysts were, and how I weeded out some of the good things, and I also identified some of the things I could have done better. I hope it adds value to you, and remember, keep it small, risk management at all times, even on YOLOs, and best of luck to you in your trading.